Greetings, market wearables, and welcome to this week's macro measure. It is Wayne coming to you. Really, it's Friday, the 24th, but since we normally get these out on Sundays, we're sticking with that convention on the date. A little bit in front of market close here. Wanted to get this and sector situation done because I've got a lot on my plate, and then we've got family visiting and things like that, and we have the Memorial Day weekend. And I don't think I've had any time off in well over 5 years. So maybe, just maybe, I can minimize Monday's activities, Sunday and Monday's activities, if I get this recorded for you now, nearly at the close. Here's our trusty intellectual property rights notice. Here is our trusty. Oh, what happened? I skipped one. There you go. And here's our trusty disclaimer. My bad. So let's get to this week's slide, which I'm keeping very lean, as you can see. We got the NVIDIA Saves the World Part 2, but in my opinion, we now have issues. So we have to talk about those. There's so many different things I would care to note. It just wasn't worth the time to note it all. I'd rather just go through it, try to keep things short. I do want to say here up front, though, with it being in the Memorial Day holiday weekend, I want to thank everyone who's sacrificed for us on our behalf. I'm going to leave many items off the table in the interest of time. I did include one paragraph from the newsletters that went out on Monday for Tuesday's action. And a lot was in there, just in this one paragraph. And I still think you could have a melt up, but I think there's also the possibility of the old false breakout. We talked about all those scenarios last week in the videos, and we got a little taste of virtually everything. I think there is conditional dynamite laying around. We did get the launch and a rug pull, so we got both of those. We still think that there is melt up potential, but now we have to look at now that they've broke out and pulled back, can they hold? Can they convert in the SMH, the Qs? Can they convert, and the SPYs really, can they convert that little breakout attempt into a pullback where they hold at former resistance and converted to support? Or is the news throwing bears a life preserver? Because there is some stuff out there. You probably saw the macro type stuff in terms of geopolitical. You had the Taiwan China thing. There's other things out there. So we'll get into it all right now, though. I think it's really just better off discussing it over the charts. So let me just briefly stop the share, and I'll reposition things and try to just go to the charts. The first thing I'm just going to go to my main screen for now, which should be screen 4. But this is really the only tab I plan to show as of right now. And I was ready to kind of give Powell and crew, I guess, give a little more credence to the rate cut situation. But maybe Powell really went a little too far, and it seems like they wanted to reel it in. So a lot of other Fed speaker comments seem to have really tampered things or tempered things too. They've tamped things down in terms of the rate cut, and they've also maybe tempered some expectations. But that's really what we're seeing here this is the CME, this is the rate cut probabilities, and as of now, pretty much looking at September, we still favor staying here with the current target rate all the way out through Sept. So they're saying right around the election, you finally get some action. But I mean, that's, a little bit of a lean that way, but it's minor by then. And that would be quite interesting if that were the case. But I don't know exactly what day I would guess that the election probably falls on the 6th. So who knows? Maybe that's true. But regardless, right, we're sitting still now, according to the market, we're sitting still. That's the probability anyway, through September. So that's obviously close to 50-50. So you really don't want to lean too heavily, but that's where things are. Last week we had this possibility as being a little bit lower. So things seem to have flipped around where we stay. The chances of us staying a little bit higher into SEP have picked up, and you can see from a month ago they've picked up. So Once again, it seems like the rates lower sooner situation just isn't there. The data, as I've said many times, that I don't really want to get bogged down on that. But the data to me is super bogus. It's super bogus. You can check out there's a link. Well, there's a story on ZH today, Zero Hedge. You can check that out, where someone did really just a shallow dive into inflation and what people are really being impacted by. They talk about a little bit about the hedonic nonsense that goes on. This is all old stuff that just gets every now and then gets recirculated and recycled and repackaged, and someone puts their little twist on it. It's worth a read if you haven't looked into these things before, or you haven't seen something like McDonald's or Chick-fil-A and how their prices have gone up. But my wife told me that she normally goes for Hellman's or Duke's mayonnaise. I guess Hellman's is more of a northern thing, and Duke's tends to be more of a southern thing. But she was making some potato salad for some get together, and uh, she was really agnostic whether she was getting Duke's or Hellman's. And she said she went with Duke's because it was more reasonable because it was on sale. Because normally she does go for Hellman's. That's what she's accustomed to for her recipe. Anyway, the point of the story is that I said, "Well, oh, okay." I'm like, as out of curiosity, what's Hellman's going for these days? She's like, "Oh, Hellman's the one we usually buy is $11 for a jar of mayonnaise." So, I couldn't believe what she said. I said, "Did you say $11?" Like that, because she said, "Yeah, that's where it is." And of course, that's the real world experience of so many people. There's certain things that have been kept in check or whatnot, but so many things are just absurd compared to not too long ago into the distant past. You're not going into the distant past, right? It's not too long ago that things were a lot more reasonable and stable, and now it's become just absurd in so many ways. And that's why I'm laughing at the 3% inflation rate and all that. I'm saying the rate of inflation probably ebbed, but let's face it, prices have not retreated or anything like that. So this is it's just all understated. So whatever. But that's the game they play. The revisions game is a similar game, right? Where basically, right, if it's good news, they try to report the good news and then always revise things towards the worst side of the news later. And that's been happening with a lot of data series. It happens over and over again. It's become so ridiculous that it happens virtually on every report, not an occasionally here and there, not even like a little bit more than occasionally. It's pretty much every report. So the hocus pocus seems to be struggling right there. They seem to have a problem now where more and more people, it's not just traders like us that have been involved in the markets that have looked at this stuff for a very long time, knowing that it's bogus, knowing what they feed the public that's not paying attention, complete nonsense. And usually that passes. And even, of course, the Wall Street analysts will come on and for interviews, and they'll talk about these statistics as if they're real, as if these statistics are not completely bogus. And that's one thing that's always frustrated me, because how can you really have an adult sober discussion when people are bandying about bogus data, and you're not even really in the real ballpark of where things are? I mean, I find the whole thing just absurd, and I just pray that I continue to find it absurd, because I'll really start getting worried if I find this to be normal, like all the lies, all the deception to be normal. It's utterly frustrating, and probably hits home a lot more on a weekend like this with the Memorial Day weekend, where again so many folks have sacrificed so much for everyone else's benefit. That's a lot of that's forgotten about. But gosh, to have gone through what so many people did to provide the opportunities that were available to us in these days, and then to have a country that's just saturated uh, in fraud and lies, as a result, it really it makes your heart heavy for anybody that paid the prices that so many did. Anyway, enough of that type of talk. It's, I think, just a little bit of a Memorial Day thing for me. I just hate the idea that people that had done so much seemed to be forgotten about so quickly. But maybe that's just the nature of things. And again, you're fighting windmills by worrying about it, but it just never sat well with me. Anyway, let's get into these charts. I've got IWM up here. Again, we've been calling this one of our canaries in the coal mine. Is it over? Right? Is the attempt to possibly break IWM out and show that this economy and this bull market's the real deal, in line with former bull markets where the smaller companies that have been struggling so much are set to benefit. I don't think it's over yet, but this week certainly took a rough turn, right? We had this as one of our ideas in case the market went strongly one way or the other. We thought this would be a good downside name to have because it wasn't breaking out as strongly, and the volatility was really cheap. That was in Rebel Pit Pro and Rebel Pit Elite in the basic services. Wasn't a gangbusters week. I do think that it could have been even a bigger drop, and maybe this gap gets filled, but it didn't happen. But that's not the point of the discussion. The point of the discussion is this line that I just adjusted, we're below there now, and that means that the proof is, and the burden is on the side of the bulls. They've got to get this back up above here to take this out of the danger zone where it could fall into the hands of sellers more convincingly. So this is really in flux, and it has been a laggard, and it's not a good sign. Now, right after a week where everything went haywire to the upside on the opening following the EPS of Nvidia, all the breadth measures have taken not just a turn for the worse, but a pretty significant turn for the worse. So I was giving them their due, as I'm sure many of you would recall, through last week. And these are just some basic things, but they've really they've had a very rough week, honestly. And I don't like what I see here. Now, these kind of negative developments could happen and the market can continue to waft higher. So I don't want to have anyone starting to go bonkers in terms of buying puts or something like that just because I'm shifting. I mean, the data shifts, so I'm shifting, right? That's really what it is. But these can persist for a while. Problematic, right? Breadth measures can be out there and worsening, actually deteriorating for a while, in my experience, before the market finally breaks, if it is to. It's not the end of the world that some of these things do not look stellar the way they sort of did. It's just a good warning sign that all is not well. And so that's what I want everyone to take away, that this is really not what you want to see when you're making new all-time highs in your major indices the way we did. You don't want to see that kind of behavior, and you don't want to see this really fail and not even attempt to break out. That's what happened. That was one thing we were watching. Another thing we were watching closely was XTN as a sector, because again, sort of like a Dow theory thing, but I think, right, there's a lot of merit to it that if goods are moving through the economy at a rapid clip and there's great demand for that, that's usually a good sign. You can see that XTN has had a rough week and a half. There's a little bounce happening today because after yesterday's smackdown, right, after the huge gap up and the rug pull happened, you were at your bottom. But it's a little bit of a relief rally recovery. But right, that's not a good look that XTN is not even anywhere near. Instead of, right, it's really threatening to make a lower low now, as opposed to where we thought, maybe if it puts in a higher low and starts to go, that could be a good sign and maybe give us some confirmation. So we were on the fence on a couple things, waiting for more data sort of to say, okay, where are things? And we still are. We're always there almost, right? Looking for the next this or the next that to tell us this, to tell us that. But in terms of could XTN and IWM have brightened things for us and made us feel better about the markets? I think they were in a position to, and instead they delivered the opposite. And I think that's a big deal. Let's look at really, right, this is what I mean by let's go to a better chart. I kind of made the basic point that these breadth measures are not really looking good. Before I get into the individual charts, though, let's flash this up. And you can see here, just on the grid of 12, that a lot of things are not ending this week well. Staples, which had been crushing it, not ending the week well. the XLY discretionary, this has had a rough week, right? Here's the transports, as we said. Other things really stalled out, right, and started to roll over to some degree. A lot of things did, as a matter of fact. So you're really close to XLK trying to break out, reversing, and then if it does not hold where the former resistance was, and this does not get converted to support near 212-ish, that's a problem, right? So the one thing that's left is XLC. That's quite far away from where I think we'd start to be in trouble on it. But a lot of other things are not. A lot of other things are already looking concerning. And so that's what I wanted to share up front, is that, this is really where it's hard, because I think the bogus nature of so many things could be catching up to the market a little bit. That maybe realities are going to intrude a little more than it looked like they were last week. They're always there. I mean, I could waste your time for hours talking about them if I could just put a list together off the top of my head, all the nonsense that I've seen, even just recently. It's horrible, but it doesn't really matter until it does. And I'm starting to think, with all the geopolitical that's been out there that's been ignored, kind of basically, right, kind of like what we've been talking about. You've got the skeleton that the gang uses to drape the price action upon is the economic calendar, if you ask me, because I've talked about it, right? It provides them cover for whatever they want to do. They can spin a story, they can do whatever they want. And it seems like that this NVIDIA thing was their moment to really, again, put it to the shorts, and they did, right? That was a real massive gap up. It was hard to fight the market the way that it looked going into that. We couldn't really find much wrong with it, other than the things we've already discussed in this video, mainly IWM and XTN as our, and really a little bit of XLY in it versus XLP too. But that was our, excuse me, that was our focus on concerns. But now it's broadened out. Now you can see that just on this grid of 12, that even energy, which I thought could be trying to break out, but that really failed. It had its chance. It's had, my line is there. You've all seen that if you watch Sector Situation, and that breakout attempt was exactly what you would expect from a false breakout. Reversed quickly, couldn't hold on the line, and just boom, right back down again. And it's making a lower low now. So you have to be concerned. In other words, everything's really, I think, taking a turn for the worse. And that's after kind of on news, right? So you got that sell on news. That's what I was talking about in the PowerPoint, the rug pull. You got that at this point. And they did come back strongly, so I had to give them their druthers. There is, as far as my measures go that I like to watch, there's a lot of money. I mean, a lot of money flowing right back into this market today, as far as it stands now, with a little less than 10 minutes to go in the day. So it's not like they didn't come back for it like gangbusters, but there's some things that have happened that are concerning. So let's get into a real chart, real basic chart that we usually use, and I'll talk about those. And here's SPY to me, right? And this is not what you want, right? You make a new all-time high. I'm trying to get us a little bit more perspective. You make the new all-time high, and then you reverse hard, right? On various news, like various news items hit. So you reverse really hard. Not a good look, right? Not a good look. You did, however, right, break out. And as we talked about, you broke out and you came back to yesterday, right to that line. And I haven't adjusted that line. That's been there since we probably got together last weekend. So you came right back to it. So that whole breakout, comeback, convert to support, right? They're trying to make that happen. That's what happened. There's still a gap here. But this is really kind of a decent little comeback, but it's sort of an indecisive day. So at this point, but it's for bulls, right? In the end, you've got to say you're above all the SMAs. That's the 10 in white there, and they're all stacked and they're all positively sloped. So as far as an absolute snapshot in time goes, this looks good if you just note some of those things. But if you look at all the other stuff we've already looked at, it's hard to be impressed. And I do think there's an absolute monstrous amount of money that's being thrown back into the market today, as if this was the greatest sale that the market's had in a long time, right? That in other words, like, I get to buy cheap now. That's what I'm sensing. So it's very, very interesting because you're still holding above. You're still, despite all the things we've cited, you're still holding above former resistance, and it could be converting to support. And we just don't know yet. It's too early to say, but it's certainly not an impressive breakout. If you look at what we've seen in the in the Qs and the SPYs, it's very similar. Come on, Qs, but a little more pronounced, I think, that the lines are, you got very close, basically close enough, I think, with the 10-day there yesterday. So I was trying to explain this to my nephew, put this in some write-ups. He was asking me, I said, well, he talked to me on Wednesday, and I just said, look, I think there's a lot of short-term overboughtness in here that needs to come out. I would not be adding personally right now. I'd wait for that to happen and maybe then go from there. So I'd rather put another way. I'd almost rather buy at higher prices when the froth has been taken out of the market and the trend's resuming, rather than buy right at a frothy level and then have to live through a drawdown and not knowing for sure where it would end. I'd rather you get in after it, almost at the same level or even a little higher, knowing that the market sort of refreshed itself with a pause. But this is a little concerning. That kind of development's a little concerning. I don't want to read too much into one day's action, but just not what you want. At least they are coming back for things big. They did hold above, right? The former resistance line. You could say, well, maybe they converted it long ago, which you could make that argument, right? That former high was broken out from, touched, and they ran. I don't know if that's the case because I'm seeing too much deterioration. A couple things also that are bothering me are, I was hoping for the market's sake that the dollar and the TNX were both going to crack below my support line, try to bounce above the support line from there, and then after that they would hit it as resistance and then roll over further. Could still happen, of course, and they're still below the 20, and the 20 is doing a decent job of keeping them tamped down, but you are still above your trend line. And I thought, well, the way that Powell was talking, which it sounds like he sent his minions out to walk things back a little bit, if you ask me, but that's why I'm not a professional Fed reader and just try to work with the charts. But there you go. I mean, that's telling you, okay, it's not over yet. So maybe these rates do have another round of rallying attempt. We don't know, but they would need to get over the 20 there in light blue, but it certainly hasn't cracked here. And even if it does crack my support line, there could be a little bit of an excursion below there, but there's a lot of longer term SMAs waiting for it there. So at this point, you really need that 104 level to crack so that everything's cracked. And you're a little bit away from there. It is pulling back today. The VIX, of course, is getting hit. It's got an 11 handle on it here in front of the long holiday weekend, which again is fairly common to see the VIX behave that way. But I'm sorry, we're at, was that the dollar? Yeah, that was the dollar we were looking at. I'm trying to think if I already had TNX up there, but it's a similar story in TNX. And this also held on the support line or trend line. And there was a little bit of confluence there, maybe that helped as well. And that has yet to crack. Now it's also being held in check by the 20 SMA in light blue. So it's not over for it in either case. In other words, if you're a bull, you're a stock bull, you can't be thrilled that it's not cracking below this important support here. But if you're someone who is a bear, right, it's not able to break out and keep going. So you're thinking a stock bear, that is, you're thinking, okay, well, it's not breaking out, so maybe, right, if it comes right back down here, I could be in trouble again if I'm a stock bear, because I do think if rates really start to crack hard below there, that'll be initially, I think at least, that'll be a very good sign for the market, but that'll be taken that way. But ultimately, it might not be the great sign they think it is. We've talked about that many times. But these two things are they're kind of part of your picture that we paint, and we'll paint more of that in other kind of quick version of sector situation, because what I think I'll do is if things change radically or we feel like there's a lot more to note, I'll just make the time on Monday. I'll probably catch a lot of flack, and there's a lot of stuff happening, like I said, with different things happening and also family coming to town. But the markets are what they are. They're kind of demanding. But here's the VIX right on its back pretty bad. Which is what you'd expect. The fact that they didn't let this really metastasize from yesterday's late day activity, and they really marched it right back very strongly. So this was a multi-year low here. You've had to go back a ways. I think it was maybe 2020, 2019. Not really that important, but it's a multi-year low is the point. So again, I know some folks brought it up, which is good. I'd bring this up with Greg and Ryan, throughout the week, or if you're in Bill's webinars or whatever. But if you wanted to get your hands on some volatility at cheap prices and position yourself, you've got to go back to 2019, right, to get to this low of a level. So this is something that's typically, right, you can sort of see that when you get this low, it does tend to revert higher. But look, if they close the month out strongly, this could get even lower. And if they do find their way towards having a great summer, this could get even lower. But if you ask me, right, there's cracks forming here that are a little problematic, that I don't feel as good about things as I did. I'm kind of viewing this as like, okay, they kind of threw us this really very interesting week here, and it didn't really go Hollywood sort of script picture perfect. And you can see the Dow in the form of the diamonds here, right? That's a real rollover. It's a real rollover from a new all-time high. So it's not the end of the world, but that's not really what you want to see, right? When you make these new highs, you really don't want to see, oh, I broke out, boom. That's a great example of a false breakout there. So that's a problem. You've got it coming into support, but I just feel as though that this is not what I would want if I'm a bull. I mean, there's other scenarios that I would prefer to this significantly, greatly. And I think the charts have turned against this a little bit. And I think you have to be more worrisome or concerned or looking to get bearish. Now, you're kind of returned to a daily RSI that's reasonable. You're in the mid, I think where are we down here on RSI? Yeah, we're at the high 40s down, and here's our reading. So we're at the high 40s now on the diamonds. It is short-term oversold. What I mean by that, though, is some of your intraday charts are going to flash oversold. So you might be a little oversold in the short run, but it's just not a good sign that the diamonds are acting this way. IWM, just not a good look in IWM right there at the moment. That could crack the 50 quite easily. If it cracks that, it probably goes to the 100 there in dash white. That's near 200. And then you get into opening up more room to the next keys levels down, which to me is down in the lower 190s, where the 150 and this major line of the 193 are right, 193 flatliner right there. So this is a problem. I'll talk more about some of these other things and sector situation, which will also be kind of more just about the charts and, verbally just trying to lay out some of my thoughts. Hopefully they help. But yeah, this is to me not a good look. A lot of the sectors were not a good look. So getting back to finishing really with SPYs and so on and so forth, we'll look at some other things. I'll bring up a few futures, but as far as the index ETFs go, majors anyway, again, not the end of the world in spiders, but the other two we just covered, they're not performing well. Spiders, that's not the way you want to break out, and then make the new all-time high in reverse. Maybe they'd have converted to support. We'll see. But look, if you don't hold that 524 level, remember they could do a false breakdown of that way, draw some fresh shorts in, and then re-energize and put another goosing together. So you don't really ever want to get too ahead of yourself. That's why I'm such a strong proponent of what I call the quick trim, where you take 2 or 3 of your base 10 contracts that you're trading. If you get a nice little initial score on that, you go ahead and you take 2 or 3 of them off, and then you're in that position where even if they play some games and start to put a false break out together and then it starts pulling back or false breakdown together and that starts reversing up, you could probably get back out near where you got in, and the whole trade becomes a small winner or a break even at worst, instead of feeling like a loser where you overstayed your welcome. And now theta has kind of wrecked you a little bit in, I don't know, 2, 3, 4 days you've been in the trade or whatnot. But who knows? Sometimes it's even within one day. But yeah, I think this, I mean, clearly nothing's broken here. And this is the highest close. So you don't want to overstate it. But with the way that a lot of sectors are looking, not good. Let's see if we can do CL. This is big. We already talked about the dollar yield, 10-year yield. We talked about the VIX. But this is not wonderful either, just like we saw with XLE, right? Not wonderful at all. And this, you want to see that energy demand coming back, and maybe it will. But at this snapshot in time we're operating in, these are not a great look. I've been waiting for that to sort of re-energize. Here's copper after a major squeeze, that's on the 20. And if that cracks, right, you're probably coming back to where it broke out from, which I would say is right about 70. Well, yeah, thanks, Thinkorswim, 70%. But let's get rid of that percentage. But it'll be right around 458. So 4.58 would be roughly about the breakout. 4.59, somewhere near there is your next level down if this cracks. And this was a big thing, right? Things started to act better off of that, as well. And then we had what else did we have? We had GC. We looked at GC. And where are we on that? Yep. And so the metals also, right, I think are a little bit of a victim of their own success. They're at risk too on the 50. Gold futures are at risk on the 50. So it's been a heck of a run. More of a retracement wouldn't be the end of the world. It can be a tough sector to trade. We did get a good pop. We had some things in there, and then that was it. This was a rough week because I think you had the dollar moving back up. So again, dollar moving up, usually that's not a good sign. So hopefully this is just a little bit of a blip and it rolls over if you're an equities bull. If it doesn't, it keeps going, right? The yields are probably also moving up, and they're fairly correlated, and the TNX will be moving up, and you'll be probably not a wonderful thing for equities. But this is, in a nutshell, right? Breadth, which was looking pretty good. Again, not stellar, but pretty darn good overall. Rough one. Really took a rough tumble, I think. So that means that under the surface, things aren't that great. And if you go and compare, we really didn't do this, but we should do that on the breadth chart right here. If we go and look at this, and if you look at the former high, I think a lot of your breadth readings were stronger here than they were here. So you have not only is there a current deterioration, but it's a little bit of a negative divergence view in my book as well. Now, again, I wouldn't go into instant panic mode because nothing's really broken that we're ready to say, oh no, this thing's all hell's about to break loose, but to the downside. But I think it's your warning sign, right? These are a little bit of warning signs that if you feel like you may have gotten a little complacent with the bull side in your trading, maybe what you need to do is just be ready, right? Just kind of remind yourself like, oh, this could be a little bit of a turning point here. Because we know what happened this week. You can see how fast it hits when it hits, and there hasn't been a correction. So you had an 8-point drop roughly in the Qs on Thursday, which is only really less, just a little less than 2%, but it's when you see that sort of nosedive, it feels really fast, especially if you haven't had one in a while. So. And we haven't, and that's the problem, right? That's why people like me love seeing action like this, where there's these regular pullbacks, and you just keep going, because that to me lets the market go without the risk of a big whoosh lower quickly that you get if it doesn't take a break. Then when you finally do get the break, it tends to be harder and faster to the downside. So you got to be careful about that. But that's the thing. We still have the Qs behaving well. right? We still have spiders behaving well, other things not so well. SMH all-time high close. So how much complaining do you want to do about the leadership space? And I do still think there's potential there. So that could be something that, right, that really buoys the market and keeps it going. It really looks like after this, right, this sort of megaphone that was developing as a corrective phase, that ended, as we talked about a while ago, and they're up and away here. So unfortunately, though, you're not far enough away from former resistance, and you could say maybe it did convert to support. We just don't know yet, but you're not far away enough from it that you could say, well, that's in our rear view mirror. This thing's now on to the next phase of another leg higher, which it very well could be. And that's a good sign too. So that's a little bit of a counterbalance, right? That we have to note that the leadership space is looking really good. And I'll talk more about this stuff, but in the sector situation. But I do think, right, some of it's a little concerning, and things did get a little bit out of hand on, they are a little bit out of hand in terms of some of the moves we've seen in some of the semis. The semis are definitely overbought virtually everywhere you look on the bigger picture charts. It doesn't mean that I don't think they're dramatically overbought, but they are overbought. But I do think something like a NVIDIA, to me, it's short-term overbought. I mean, anyone and their grandma knows that NVIDIA is short-term overbought. We know that, but it's starting to get bigger picture overbought as well, but it still has room. So to me, you've got to be, you don't really want to fight against this yet. And I think it could still tack on a lot more if there is a real bull market here. If we don't have a real bull market, it might be a different story. But if there's a real bull market that's sort of playing possum with us right now, it's really out there, but it's acting like it's not, which could be the case. This thing's got a lot more potential in my book to go. And I know that sounds a little crazy after what it's done, but I just have seen this before many times, and every time the charts get it right. The charts get it right when there's a real bull market and the things go so far beyond what people would expect, any reasonable person would expect. And that's just been my experience. So I'm going to probably end it on that note. Like I said, the main message is that this is not a great Hollywood script situation at this point. It would have probably been better, had we not had this the big sell-off and the deterioration in fundamentals. I'm sorry, the deterioration in market breadth measures. Some of them we just kind of glanced at, but it's there. You can see that visually. And some of the sectors, as I noted, a lot of the sectors actually are far from ideal in terms of their kind of complexion at the moment. And that's got to be concerning to you when everything becomes more narrow, right? You get more of a narrow leadership now from semis and maybe XLK and XLC, and that's what we're back to. Now, that'll be great if they really do keep leading the way and hold things up, because it will allow those areas to participate. Those areas to still be hopefully chock full of good ideas we can capitalize on. But if they start to come back in line with the rest of the market and the rest of the market remains heavy, right, that's not a good sign. So you're at a spot where you've got to be careful that if the semis especially start to suddenly become they become victims of their own success, and a lot of investors decide to sell them and bank some profits for now, thinking that maybe it is sell in May and go away. Now, that's really shouldn't happen according to historical precedents for the fourth year of the presidential election cycle. But right, nothing says we have to follow that script. We have been following it fairly well, but we don't have to follow it for sure. That's always the problem with the analogs and the cycles and this and that. They do often play out, but it's not that they do every single time. But that's the thing. You've got to take risk more seriously now. I think you position yourself in November and October volatility. If you want to go out a little further, February would be my next best month. If you wanted to own some things, and that's something you can definitely talk to, especially Ryan, but certainly Greg and Ryan during the webinar. So let me wrap up on that, and let me just wish everyone, be prudent, be respectful of risk at this point. Let's see what comes our way, and hopefully support holds, and hopefully we're not dealing with a little bit of a rug, even a larger rug pull than we already saw a taste of on Thursday. But thank you all for tuning in. I hope you got something out of this video that can help you in the week ahead, hopefully, or some other week in the future. I want to thank everybody for their service. I want to thank everyone for the sacrifice for Memorial Day on behalf of Market Rebellion, my colleagues, etc. I want to wish everyone a safe, happy, fun, wonderful, long holiday weekend that we're all benefiting from, thanks to others. And like I said, I will get back at it if we need to, because there's been some developments, and we'll get some other videos taken care of on Monday to kind of factor in new information if there is some over the long weekend. So everyone take care, and thanks again for tuning in.